Hello, my name is Al Bruno. I'm Technical Director for Belka Yacht Asset Management. I've been asked today to speak on strategies and expectation. I'm not speaking from a script. I do not intend to use any charts, numbers, time intervals, statistics, or anything to speak about expectation. I'm using images of nature to try to open the viewer's mind to other possibilities and what expectation could mean to them, or to add another dimension. First, to define expectation. The classic definition of it basically is the length of a target, or your profit, the size of your stop loss in relation to the number of wins or number of losses over a series of trades. And in combination, a mathematical expectation or a probability can be construed out of this. Many strategies actually do work. The ones that work well, and they may fail in backtesting or walking forward, but in reality they still are good strategies. What we have found is that the major reason for failure is the user or the strategist's inability to go with the market flow or pattern, to not be sensitive enough to changes in the market, to open up the strategy to have a new expectation for target or stop loss. Our approach at Belka Yacht has been based on nature. We've been looking at this for a number of years now, where we realized that the whole world looks at mathematical patterns and probabilities based on price movement, which is good. And there's many people that make money looking at one single chart and looking at a certain time frame. They're very talented people. But what we realize is that in order to be dynamic with the marketplace and be flexible with it, we can't just look at price momentum. We have to look at something else that opens up the possibilities to greater expectation and to greater range of successful optimizations or strategies that would work, using the same strategy but different parameters. In the example here, we have fish traveling. Now, one can look at this in two different ways. The fish could actually be traders, and many traders could be looking like they're going in the same direction but doing things for different reasons. It also could be price movement over multiple symbols, where we don't actually know where price is going to an untrained eye. Many times we find this and think that we are the only person trading and price is traveling against us, as if there's a greater force against us, which may be true, but in this case we are looking from a nature standpoint to find probability. This particular school of fish appears to be traveling in the same direction. Now, one would say, well, how do fish know when to change as birds flying in the sky? They seem to change direction at a whim and dance together or move together without crashing into one another. What is the lead fish? Why does that fish or those fishes make those decisions? And does the same fish decide the direction, or does it turns or taken? Those type of things could also relate to the marketplace itself, where one looks and says, well, why is price moving? Why is it oscillating up and down in between certain intervals that you may not be readily identifiable? And this picture right here, I said, like, fish are going in the same direction. But upon closer inspection, we notice that there's actually deviation from this particular pattern. We could call this could be potentially the birth of a new trend or a new expectation. It could be that this particular direction may have a greater amplitude for our target and a shorter stop loss, and or reverse. It could be that our target shortened and we would need a greater stop loss to make money. In any respect, the old pattern, the old strategy might be adversely affected if we weren't sensitive enough to find out the changes that are about to take place. I'm using this particular image to show that nature does have trends. Anyone who's astute with nature will notice also that there are migrations of birds and migrations of animals over great distances, and they travel in clusters. And they do form patterns and trends that can be readily identifiable. The marketplace is similar, although we're not really sure why the market does it. We react to it technically. Like this particular flock of birds, we may be, this particular flock of birds actually I find quite interesting. When I see it, I see 3 or 4 different strong patterns inside the overall cluster. And if one looks at the market itself, we will find that there are many patterns and side patterns, more or less like fractals. where if one looks, they can see a bigger pattern, but if they go smaller, they see other patterns inside those patterns, inside those patterns. And of course, these are people trading for different reasons on different time frames, but all crystallizing to make an overall pattern that one can break apart, per se. But again, all relating back to nature. There's no difference between nature and human beings. This picture is of a rush hour in the United States. The sun's rising, and these people are heading off to work. Now, if being a normal human being, I'm sure that if you were to think back what you did this morning, what is the first thing you did when you got out of bed? It could be you put slippers on, it could be you kissed your wife, brushed your teeth, ate food, but chances are you had a similar habit for the past couple weeks, month, year for that matter, that you followed. There is no difference between you and other human beings. And if human beings as a collective make up the marketplace, then those patterns probably affect the market overall as opposed to price. There is definitely something happening in relation to the movement of time or the time of day. People may have more energy in the morning, people may be tired, but those patterns exist and they can be quantified. Similar to many people fishing off the same bridge, this particular river only has so many fish it can give up. Out of, say, the 100+ people that are standing on this bridge, the percentage of people that catch fish are probably quite small. That means many people on the bridge are going to go hungry. And of course, some people possibly will lose their hooks, their fishing rods, as other things get tangled up. So what makes the difference in the fisher person here? Who is going to be the most successful? Well, it could be the one that goes and casts their line the furthest. It could be the one that gets there early enough. There could be many reasons, but the key fact is that this river only has so many fish to offer. And the rest, if you don't know that, then you basically are doomed if you're looking to feed a family with this many people standing at the bridge. So one has to understand the expectation of the time of day where everyone is fishing, per se. The expectation we look at Belkayat is similar to this clock, which I find quite fascinating. This particular timepiece is Fibonacci based, similar to a nautilus. You'll notice that from the center of time it expands out proportionally to be greater. If one were to start close to the middle of the clock itself, at the beginning of the spiral, and cast their line or their net out to find expectation, they may, with certain fitnesses or criteria, decide that that each ring offers a different expectation or a different probability for success. We never know what time is going to be the best time or the best for expectation. Similar, people trade for different reasons. They trade on different viewpoints. Some people trade from tick charts, from share charts, from daily intervals, from intervals 1 minute, 5 minutes, 10 minutes, 30 minutes. They may have multiple charts up. They may do daily. They may be institutions that trade once a month or once a week. It may be professionals that are trying to lure other traders into a trap. It could be that they're fearful of getting in a trade, they're fearful of getting out of a trade, they're fearful that they missed the trade. There's so many reasons why people trade that one cannot quantify it all at once. But overall, like a piece of cloth, each trader, each investor adds a certain color or thread to that fabric to make a pattern. And our suggestion is that the pattern, though it may not last for an extended period, happens in clusters enough where one can actually find expectation and reach a certain amount of success in trading. So in general, we find that price momentum is a very good expectation for the success of a strategy. But as the strategy fails, in order to find the next optimization of that particular strategy, one may need to look at another dimension that pulls the numbers back in line and makes that strategy work again for a certain period of time. And that is time itself. The one thing that links the world is the sun and the revolution of the sun. Every day our clocks get reset. Every day when we start over, we are creatures of habit. And until we find a reason to change that habit, we are probably using the same parameters or the same models, the same computer algorithms in order to make the trades until we hone them again. The market is made up of extremely intelligent people hired by some of the strongest and most powerful companies in the world. So they are constantly looking for that edge. In order to get an edge from an expectation standpoint, you may find that the overall pattern of people being people is too great to ignore and will definitely add an added kick to your strategies. Thank you very much. I hope you got something powerful out of this particular presentation. It will be available at the Salon AT on March 26th and March 27th. I'm Al Bruno. Please feel free to come up and speak with me, and I will gladly share with you more of my viewpoints. Thank you.